Hello, everyone. Thank you for coming on to the webinar this evening. Obviously, as the title slide says, it's Navigating ESG and Sustainable Investing. We've had a lot of people register for this, so I'm just going to give everyone a couple minutes just to log in and join us, and hopefully we can start in the next few minutes. I'll probably give everyone about 2 minutes because I've tried to keep this a bit shorter. I think previous feedback is we could do these webinars for hours. Past ones have been very, very productive. But of course, you know, we want to try and keep it concise. Understand you're all busy, etc. So I'll give everyone a few minutes just to log in, and then we'll start. I think in the meantime, just very quickly, I know a lot of you are already, you know, familiar with myself, but I know, you know, looking at various attendees and names on the list, that there's people that I've never met or spoken to before. So if you're one of those, hi, my name's Ian Pryor, as it says there. I don't know why there's a picture, obviously you can see me now, but these are all my contact details. I've got my email, phone number, you can WhatsApp me as well. Also my personal website and my LinkedIn account. Across all of these, I put various articles, thought pieces together, etc. And please feel free to, you know, contact me for anything, even if it's not about ESG or sustainable investing. Obviously, as long as it's about investing. So that's the agenda for today. Like I said, I'll give a few minutes just to, you know, allow everyone to log in and join us. Then we'll move on to the two key topics, you know, an overview of what ESG is and what sustainable investing actually means, how to actually invest sustainably, and then of course I'll give some time for some Q&A. Whilst it is set to finish at 5:45, you know, I'm more than happy to, you know, keep this running a bit longer if there are questions. Of course, you know, you can email me and contact me, and I'll get back to you, you know, with the answers if I can. Okay, so just very quickly, I want to get away 2 slides now, which is the disclaimer. I'm told by compliance this is the most important slide, or I should say slides, in the whole presentation. There are actually 2 of them. Please take a second just to read through that. Basically, I mean, I guess in a nutshell, it's saying, if you watch this webinar and you go away and do some investing yourself and it goes wrong, please don't blame me. But of course, at the same time, you know, if you get some good ideas from this, or if you're already a client, then, you know, please give us some thanks and recognition for, you know, giving you some insight and some ideas to how to change your portfolio, and particularly today, how to potentially, you know, provide a positive impact whilst doing so as well. So just very quickly, while we wait for a few more people to join, those that aren't familiar with me and the IPP, this is how we can help you. We actually have the full range of financial planning license in Singapore. That's everything from the corporate side, but also on the personal side. That could be insurance, it could be investing, and of course, investments or wealth management is very much the key, you know, of what we do. It's very much the core of the business. Over the years, we've managed to very much cement our place as the top and #1 financial planning company in Singapore. We're a licensed financial advisor by the MAS, the Monetary Authority of Singapore. And as you can see, we have, you know, 50,000 clients all over the world, just as, you know, all of you are in various countries right now. We've got about $1.4 billion of client assets under management. And there's about 300 advisors in our Singapore operation. So I think there's quite a lot of people that have now joined us. I mean, late people can come in whenever. We're here today to talk about ESG and sustainable investing. These are very much not new concepts, but have very much been, I guess, put into the limelight in the last few years. They've certainly got more and more popular. And I think perhaps everything that's happened around COVID-19 this year has perhaps also, you know, pushed some of us towards thinking about the world that we live in, about ourselves, about how we can potentially actually invest in a sustainable and responsible way. And actually, perhaps that's a good way of investing. So hopefully today, I can give you a quick breakdown. You're not going to go away from here being an expert in either of these topics. I myself am not an expert per se in these topics, but hopefully it will give you an understanding of, what this actually means, give you something to think about in terms of how this can actually be a positive investment, both in terms of impact, but of course in terms of returns as well. The two can go hand in hand, which perhaps previously has not always been the case. So I think if we move on, quite simply, if you're brand new and you don't know yet what ESG is, now you do. 3 letters: environmental, social, and governance. So it's very much about how companies that we invest in, how companies actually have some sort of policy towards these 3 key areas. Do they even think about these 3 areas when they're going about their day-to-day company management and strategy? And what's their vision for the future, not just in terms of business numbers, profit and loss, revenue, etc. But are they looking at these 3 key elements, which is the environment, the social side of things, and good corporate governance as well? And I actually think these 3 things are anyway very important when you're looking at a company, whether you want to invest in the company. Are these 3 areas part of their vision and plans? I think it is actually very important and very relevant. So, sustainable investing. The first section today, I'm just going to talk about some of the different types, but also how it's evolved over time, because it has evolved quite significantly and quite quickly as well, as I mentioned, in recent years, and particularly this year. So I got this slide actually from Arabesque, which is a company that I've met and dealt with quite recently, but has been very interesting. So they obviously look at the various types of ESG investing. And you can see here, this is quite a good scale. I guess there's 2 sides of it. One, when you're investing, are you value driven, which could be traditional investing, or right at the other end of the scale, are you values driven, so philanthropy? And then you can see in the middle, these are the 3, I guess, key types of sustainable investing. Looking at ESG as a key factor, responsible investing, and also impact investing. And I guess this scale, what's interesting is, traditionally, traditional investing has been the one that gives you the returns. And if you want to do, something good for the environment or something that takes on these types of values, historically, perhaps the returns haven't been quite as good. Well, I think that's very much changing now. And what you can see here at the bottom is, yes, traditional investing is all about maximizing financial return. But what I want to show today is this ESG investing side. Perhaps that's also about maximizing financial return. Possibly it can even give you better returns. We shall see. And then as you go along, you get the responsible investing side of things, impact investing, and like I said, eventually down to philanthropy. So, as I mentioned, it is very popular around the world now. This is not a new concept in Europe, and in particular in Scandinavia. This has actually become very much part of living culture, corporate culture, and has been actually for a number of years now. America is fast catching up. It is becoming more and more prevalent. And to a smaller, slower degree, we're now starting to see Japan, Canada, Australia, New Zealand joining that. Now, obviously, that's only a very small part of the world. We're missing Asia. Well, Japan, I guess, is part of Asia, but China, of course, is a huge part of this. And where I'm sitting today, Singapore, is a very conscious sort of sustainable country. However, from a sustainable investing perspective, Asia really isn't on the map yet. But I think it is changing. I really do. If we just quickly look at some of the history and evolution, like I said, this isn't a new concept. It actually goes back many, many, many years. We can see actually back to the 1700s, the Quakers, Methodists, they arguably actually first started this. Not so much ESG. ESG, as you can see, was coined in 2004, more from a socially responsible perspective, more from a screening perspective. So rather than just investing in anything, it's about taking away some of the bad elements. Probably the most obvious of these, if we look towards socially responsible investing, probably the most obvious of these are things that we know are bad. We don't want to profit from things that potentially have negative effects on the world, the environment, us as a civilization. You know, smoking, cigarette companies, for example, a lot of the big oil players using fossil fuels, anyone involved in creating arms and machines of war. These have actually been around for quite a long time, where quite simply people have an investment proposition. They look towards a certain sector or type of investment, and will just exclude those ones. And that's really what social responsible investing is all about. And you could say that probably started around the Vietnam War. Chemical companies, for example, these would have been ones that would have been excluded. People did not want to invest money in companies that made a profit from something that impacted, you know, the world we live in. So then we go to 2004. Like I said, that is a long time ago. You know, 16 years. It's actually slightly longer than I've been in Singapore, which seems like a very long time. And that's when ESG came about. It was actually through the United Nations, for the UN, when the then Secretary General Kofi Annan, he wrote to 50 CEOs of major companies, and really was trying to find a way how we can incorporate ESG into the capital markets, into the financial world, make it part of, you know, corporate culture and business planning. And that really started it all off. In 2006, we saw the principles for responsible investing actually start on the New York Stock Exchange. And again, this is very much about giving guidelines for companies and targets. You know, everyone can do their part to try to, I guess, manage businesses in a responsible manner. And subsequently, as such, we can invest in those businesses and know that, you know, it's a responsible and sustainable investment. One more year later, we've got 2007, and MSCI actually brought out the indexes for ESG. And of course, you know, index investing back then was quite small. Today it's huge. And that's also really helped drive some of this, you know, ESG mentality into the day-to-day thoughts of today's major company leaders. It has to. As I said, the inflows are so big into index investing that companies that don't meet these ESG criteria simply get less inflows, and they have less investment going into them. So I think companies have been slow, but they are very quickly learning that ESG is important, like I said, not just for the world, but for the attractiveness of their companies as investments for us. Then, of course, today we're in 2020. You know, I think it's a big talking point, whether you're living in Singapore and, you know, you've suffered and seen the haze that comes once a year from all the palm tree plantation burning in Indonesia, for example, and parts of Malaysia. We've obviously had the bushfires in Australia and California. You know, these are huge things that really are making people, you know, sit up and take notice, I guess. We are seeing the world around us changing. This is filtered through into television, the media, celebrity. Actually, we can go back all the way to 2006, I think it was, when I imagine most people have probably seen this, but 2006, we had the Inconvenient Truth film made. And of course, there were, you know, there was a political agenda there, and there was lots of critics, as there are with any documentary. But again, I think that really brought what we all were thinking already very much into conversations that people were having at the office, over dinner, you know, over a drink, etc. And fast forward today, I don't know if anyone's seen it, but this year we've had on Netflix, David Attenborough's, what's it actually called? A Life on This Planet. Brilliant. Anyone that hasn't seen it yet, please watch it. It's really really quite eye-opening and very well put together, as these documentaries are. Now, I'm not here to talk about how we can save the planet or climate change. It's more about the investing side. But I think it's important to realize that, this is becoming such a huge talking point and actually part of people's lives on a day-to-day basis now. So that's really the history of the evolution of ESG, or sustainable investing, if you like. So what's happening today? Is it actually getting more popular, or are we just talking about it? Can it also increase returns? Like I said, traditionally, we've always looked at normal investing as being the maximum financial gain, whereas perhaps anything that was socially responsible or sustainable or impactful, perhaps not necessarily. And actually, that's changing. It's actually changed, in fact. So we can see from the inflows, we can see from the news, it's everywhere. These are just a few snippets. Obviously, if you go to any investing or even media outlet, pretty much every day something comes up about sustainable investing or ESG. These are very much, the buzzwords of the investing world at the moment. But it's not just the media, it's not just headlines, it's actually happening. So just last week, Bank of New York Mellon produced a report, and it's a long report. I can send it to anyone that's interested, but in it actually confirmed that in Q1 this year, we saw $10 billion of inflows, so new money, going into ESG and sustainable investments. In Q2, that rose to $70 billion. These huge numbers. And again, like I said, perhaps it's spurred and accelerated by this pandemic, what we're all going through. It's made a lot of us wake up and think, right, it's not just what we do day to day, but I don't want my money to fund, the companies and corporations that are causing this. I want my money to be invested in companies and corporations that care about what's going on and even trying to, improve things. Just today, I've received actually 5 emails. I wish it was only 5 emails. I've received much more, but I've received 5 emails on ESG investing or sustainable investing. So, it's very much all around us now. What we can see across the world, this is looking at, I guess, not just the, inflows, not just the returns or anything like that, but it's showing what the growth is around the world in the interest of responsible investment. And again, you can see it's the key players. Europe, it's already very, very popular, making up 46%, 11.7 trillion euros. And that represents an 11% growth in the last 2 years. America, or USA, as you can see, is behind 10 trillion euros. But look at the rate of acceleration. That's really picked up in the last couple of years, 38% growth in 2 years. And of course, on the periphery, as I said, we've got Canada, Japan, Australia, New Zealand, very much slow. But again, the growth rates are huge, 46%. Japan, 307% growth in 2 years. I mean, it's really starting to pick up now. But we have this huge area here, Asia, where most of us, not all of us, but most of us are based, where it's really been quite slow to take on. And like I said, I can see that changing already. Just very quickly, this gives a snapshot of where institutional or even sovereign money is going. It's only going back to 2014. But again, you can see some big numbers, 13.5 billion, 130 billion. But what's also quite interesting is the vast array of different types of ESG or sustainable investments that these institutions or sovereigns are actually making. It's anything from carbon-related things. You can see ESG Leaders, which I'll talk about more later because I find that quite an interesting and also easy way to gain access to ESG investing. Climate Transition Index, again, carbon, corporate sustainability, etc. You get the picture. There's a lot of money going into a lot of different areas, but all ultimately ESG themed or sustainable investing themed. So what about us? Like I said, from a personal perspective, some may be doing lots, some may be doing none. But I think, in the recent years, I know I myself have made some changes to my lifestyle. I know many people that have as well. And that could be around food and diet. I think for many years, there's been things like fair trade for coffee. Chocolate is still a very big talking point. Are they using child labor, for example, things like the exploitation of humans, charity and fundraisers, saving energy and water. I think this is probably the least impactful, but what most of us are starting to do. That could be taking shorter showers, trying to not waste electricity, turn the lights off when you're not using them, or aircon in this part of the world eats up a lot of electricity. It could be as simple as taking the bus or train instead of a taxi, or driving a car sharing, etc. You get the picture. Beach cleanups, very popular around here. Plastic everywhere is horrible. And I guess linked to that, people starting to use metal straws. I know some people take them around with them. I've actually got one here that I'm using for my water. Even though I'm at home, I don't need a straw, but anyway, I thought it was quite a good visual aid. And of course, things like recycling. So that's us from our perspective, sustainable living. In terms of sustainable investing, though, I don't know how many people are actually doing it. I know when I look at my business, my clients, my own investing, again, a few years ago, a very, very small percentage, 1, 2, maybe 3%. Today, I can see it really picking up. And hopefully after this, there'll be some interest as well to try to include sustainable investing in portfolios. Like I said, the retail, so people like you and I, are a very long way behind institutional money and government and sovereign money. And you can think about, ESG and socially responsible investing, sustainable impact, and think about, what percentage of, the portfolio you could actually allocate to this. So how do you actually do it? How do you invest in a sustainable way? I guess the first thing is, how do you even know what you're investing in? Where do you find the information? You might make a decision to invest in ESG and in sustainable investments, but how do you go about it? I mean, obviously you can speak to me. I can help guide you. You can follow me on social media as well. I use Twitter for ad hoc tweets about what I'm investing in. I've put up just a couple of recent ones here. It's interesting because companies like Nike and TSM Taiwan, semiconductor manufacturing, these aren't necessarily companies you would associate with ESG and sustainable investing. Nike, in fact, came under a lot of fire for a number of years about using child labor. That's obviously, they've made a conscious effort to transform how they operate as a business. And they also do things like you can buy trainers that are made from sustainable materials. They're actually quite big on their endeavors and really trying to make an impact and a difference. They are a very high ESG scorer as well in the scores. And TSM as well. You'll find them in nearly all of the indexes top 10s for various different ESG ratings and metrics, which I'll come on to in a second. So yeah, if you use it, follow me on Twitter. You can look on LinkedIn and also my own website. I quite often post articles and informational pieces, and of course the recordings of webinars like this as well. Other than that, there's a lot of stuff online. I mean, you can just use Google. If you type in ESG, type in sustainable investing, you'll see, now 20, 30, 40, 50 pages on Google covering this. 10 years ago, you probably only just see the top 10, the first page. So yeah, Google it. You can use fund managers. I've mentioned 3 here. Obviously, the list could be quite big. Nearly every fund management house is starting to really take this quite seriously now. These are 3 that I just invest in personally, that I know, that I've used for clients, that are available in Singapore. There's Alquity, Amundi through their CPR range, and Arabesque. Actually, all beginning with A, quite interesting. Maybe we should change our name to APP instead of IPP. The other one is MSCI. I mentioned at the start, they created a number of ESG indexes, and they're creating more and more all the time. They're actually a very good resource. If you go to their website, you can see lots of different indices that take into account different types of ESG. And like I said, later I'll be talking about ESG Leaders, which is one of the MSCI ranges. And I think that's a really easy, logical way to very simply get some access to ESG investing. In terms of actual screening companies, again, you can do your own research using Google. You can just outsource to fund managers. You can look at the MSCI, but also there's lots of ratings and scores now. I think even as recently as 3 or 4 years ago, there weren't that many available to the public. A lot of them are subscription only. A lot of them you have to pay money to access, but more and more so, they're becoming publicly available. Yahoo Finance actually is quite a good resource for all things investing. But they have ESG scores as well. So you can look up individual companies to see what the ESG score is. Interactive Brokers, if anyone uses them for trading or buying stocks, they also have recently introduced ESG scores. So when you buy or sell or research a company, you can see what their ESG score is. S-Ray, which was, I mentioned through Arabesque that I found them, they produce this S-Ray filter, which is really quite a fascinating way of looking at ESG and various other factors and scores. And also they have a heat map, so they have a temperature gauge. So it's not just what the ESG score is, but is it improving? Is it actually getting worse? This gives quite a good indication, you know, when you're trying to consider a company, whether they're ESG friendly or not. Sustainalytics, again, you know, the list could go on. There's so many different companies doing this. One place I'd like to guide you all to, I've got nothing to do with this, but Corporate Knights, very interesting. So they do a global 100 every single year. They produce a list of 100 companies. You can buy the full report, as you can see here, it's actually for sale, but they do list the companies for free, so you can see them. You can see where they were last year as well, or if they're a new entrant into the top 100. And it's just their list of, after their research, what they believe to be the top 100 most sustainable companies in the world. Again, you can find, well, I mentioned TSM. TSM is on there. So sometimes surprising companies that you don't necessarily expect find their way onto the list. So it's quite interesting. So have a look at that when you have a moment. I found it fascinating, and I did check back on the site. They often, of course, put other articles and information out there about, you know, sustainable investing. And it is all around us. I just want to highlight, I guess, you know, companies in red, companies in green. Obviously, the green are the, in my view, the more ESG friendly ones. But it's just another thing to look at when people are buying managed funds, or they're buying an ETF, like an ETF in the US. You know, would actually incorporate all of these companies. And that's great for getting exposure to the US stock market. But again, if your decision is to try to be more sustainable and more responsible in your investing, you buy an ETF in the US and you're actually going to buy these companies. American Airlines, okay, it doesn't fly much at the moment, so it's not you know, it's not doing that much damage to the environment. But yeah, again, Philip Morris, smoking, etc., ExxonMobil. There's lots of, you know, the big oil majors who, of course, are evolving. They are innovating. A lot of them are doing lots of endeavors into the clean or green energy space. But of course, fossil fuels and in particular things like fracking, these are quite often a huge part of their profit and loss and their revenue. So, you know, you need to be careful with that. I put these two, interestingly. So Ford make the cars. Again, you could assume that that's a negative ESG scorer. I haven't looked them up. I will actually look them up because it will be interesting to see, because again, one of their endeavors that many automobile companies are doing now is looking at electronic vehicles, and Ford actually are creating and researching and spending a lot of time and resources into this area, which of course is sustainable and is a friendly ESG factor. And Coca-Cola, I just put that there because I think most people's initial reaction was sugar, bad for us. which is true. It is nice to drink, but yes, it is very bad for us and our teeth. But it's also about the plastics. Plastic bottles. Back in the day, they were all glass. Of course, now it's cheaper and easier to produce plastic en masse. Now, what's interesting about Coca-Cola, and it could be one to watch potentially to see if it changes, but back in the 1990s, they made a pledge to try to use recycled plastics. Now, very quickly, actually, as soon as 1994, they stopped that. It was simply too expensive. They weren't making as much profit margin, and it wasn't worth their while to do it, frankly. Interestingly, in 2008, they actually announced to the markets that they had a 2030 pledge to have up to 50% of their bottles from recycled plastics, which is a great pledge. It is 2030, so that's a long way away. 50% is still 50%, it's not 100%. And actually right now today, they're only at 20%. So again, not really a very sustainable, friendly company, but perhaps they will change. Again, these are they're all pretty obvious. One interesting one I want to highlight is Microsoft, because again, I want to dispel this myth that if you want to invest in ESG and sustainable companies, that you're not necessarily going to get a good return. Well, Microsoft is one of the top returners out of any company on any exchange in the world over the last few years. And it's probably, maybe not my top, but certainly my top 5 largest individual holdings for myself personally. And what's interesting about them, again, you can hit this into Google, they're not just trying to reduce their carbon footprint, they actually want to go carbon negative. And they've made a pledge to go by 2030 again to be carbon negative, such that they can basically cover all of the electricity that they've used, all of the carbon that they've put into the atmosphere, and completely reverse that, going all the way back to their inception in 1975. And I think it's quite a bold statement, but it's a great statement. That's really sharing our vision together to try to make the world a bit more sustainable. So actually what they've also done is they've created a $1 billion climate innovation fund as well, to try to obviously help carbon reduction or even reversal. And they've also pledged to help their entire supply chain, all of their parts and manufacturers that they use, to try to increase and improve their carbon footprint. Decrease and improve their carbon footprint. So, it's not always necessarily the clean energy companies or Smurfnappit. That's a good one to look up in the UK, on the London Stock Exchange. They make all the recyclable like paper trays and boxes for food takeaways, deliveries, that sort of thing. These are obvious sustainability plays, but sometimes it's the ones that aren't so obvious. Sometimes it's the past, baddies like Nike that are actually now making the changes. Okay, so I've got 2 charts here. Again, I just want to demonstrate that, ESG can actually return. It's taken from a previous webinar. That's why it has quality on here. Quality, as anyone that knows me, is my number 1, first and foremost, factor when I look at investing in terms of maximizing returns. As you can see, that's quite evident. But also ESG investing. We've got here the MSCI ACWI, that's the All Country World Index, which is basically global stocks, including emerging markets. And you can see that going back to 2007, it is very slowly, but it is very noticeably as well, starting to outperform the exact same index. And that's quite interesting because, again, it dispels this myth that ESG investing is just a buzz phrase, or it's just something we want to do to try to improve the world. It's not. It's actually companies have woken up. They've smelt the coffee. They are changing. And that's actually put through in performance. That gap is starting to widen. And this ESG Leaders, I'll comment on that in more detail in a minute. But like I said, I feel that this is a really simple way. If you want to learn a bit more about how you can invest sustainably, just look up MSCI ESG Leaders. It's very interesting. And like I said, quite an easy way to access. So this is what I do. This is my own investments. First of all, like I said, I look at quality. You can see how I combine the two types. I then look at socially responsible investing. So I exclude the Philip Morris's, the Royal Dutch Shells, some of the bad stuff, if you like. But then I also look at ESG and sustainability as a positive factor. So some things that I might want to hold in my quality portfolio, I'll exclude because they're bad. But also some things that perhaps aren't high quality enough to make it into my quality portfolio, go into my sustainable portfolio because of all of the things that I've talked about before. Now, again, this is my own account. I'm not a fund manager, I'm not a professional money manager. But you can see it's quite interesting. It's VT is the Vanguard Global Stock Index. It's basically the ETF that Vanguard sells and creates. It's essentially the MSCI world. So it's developed markets all around the world. And you can see the outperformance is really quite significant. So either I'm a genius and an investing guru, which I like to think I am, but maybe I'm not. But maybe it's actually part because of this process. It's looking at quality companies, it's excluding the really bad ones, and it's including those that really are taking ESG and sustainability serious. You can see in the 1 year since I started it, it's a nearly double return, 24% positive versus 12.6% positive. I think that's really quite impactful. Hopefully it continues and it's not just a lucky year. I'll keep people updated on it. And you can see all this sort of stuff on my website as well, if you go to my website. So anyway, back to the indices. I mentioned before about the MSCI All Country World Index, ESG Leaders. So again, you can see that the gap is starting to increase. You can see it's not 1 or 2 lucky years. You look through the whole track record, it's consistently either outperforming or losing less than its parent index. And what's interesting, again, there's no sort of quantitative things going on. There's no algorithms or trading. It's literally taking the world stock indexes, and all it does is look at each sector. It takes the top half of each sector in terms of their own internal ESG scores, and that's it. And that's why I said it's a very simple, very simplistic way of doing things, but you can see it consistently outperforms. And I believe anyway that this trend will continue for the next couple of years and beyond. So this is a very easy, simple form without lots of research and looking at lots of different scores and numbers and things like that. I think this is a very good way of accessing ESG. So there's obviously a load of ETFs that replicate this index. So it's a good way to gain access. And again, it comes down to you. Where do you want to be on this scale? I guess most people probably do a little bit of all of this. But in terms of your actual investments, most people probably still very much in this box. And hopefully what that's demonstrated just now is that actually ESG investing also maximizes financial return. In fact, I hope if I do this webinar next year or the year after or in 3, 5, 10 years time, this ESG box will actually overtake traditional investing and be the real financial return maximizer. And I don't see why not. But it's nice to do some of this as well. Impact investing is very interesting. Again, that's creating a lot of inflows of money on the institutional and sovereign side. So that's more of a focus on the actual outcomes from sustainability endeavors. Financial return is not the priority, but of course can also still happen. But I think, this is very much these two are the areas where you can quite easily and quite simply actually, add these into your portfolios. So again, some sustainable investments. I mentioned the 3 fund managers that I use. Again, this list could be very long, and I imagine it will increase in length over time. But Alquity, excellent, particularly in the emerging market space. They have what's called a virtuous circle, a very interesting model. Amundi, through their CPR range of funds, have very targeted fund strategies actually. So towards climate action is one of them. Food for generations is another one. Education system. Not just a lot of the time we think ESG is about climate, but it is also the social aspect as well. And they have quite a good range of different targeted funds around that. And Arabesque, who I mentioned about the S-Ray, they have 2 very interesting funds as well. Anyone wants any information on these, just let me know and I can send them through. And like I said, ETFs, I've gone through the MSCI, particularly the ESG Leaders. I think that's an easy way to access ESG investing. But just very quickly, a couple of areas where you can be a bit more specific. So we've got this Global X lithium and battery tech. That's a play on clean energy. It's a play on the electric vehicles. DRIV or Drive ETF, also by Global X. Again, that's just looking at the electric vehicle space. So it's companies that are producing either the cars themselves or the technology or the research, or also things like the batteries behind them that are powering it. So, these are some slightly more specific areas you can look at. Global clean energy as well. Wind power, solar power, all these sorts of things. And also gender diversity, another big part of the social, the S part of the ESG. Again, this is slow to take on in parts of Asia, but is already prevalent in Europe and growing very quickly in the US. And then you can look at your individual stocks. You can create your own screening. So you can exclude the types of companies that you don't want to invest in. You can research the ESG scores through Yahoo Finance or through Google online and all the other methods I mentioned before. One thing to note also is look at ESG controversies, because this is also something that is reported, it's in the media, but it doesn't necessarily always filter through to ESG scores. Now, a lot of the ratings companies will separate the two, so just have a look at that as well. And like I say, you can do your own research, basically. And again, go to MSCI. Not only do they have the ESG Leaders, which I talked about just now, but you can see again, look, there's so many different ranges. These aren't individual indexes, these are ranges of indexes. Climate, low carbon, carbon footprint. There's really a lot out there. Like I said, 10 years ago, well, there was hardly any at all. 2007 was the first one, in fact. And again, just going back to ESG Leaders, you can see again, it's broken down. China, All Country World Index, it excludes USA. Maybe you have already a stock portfolio or a load of funds that have huge exposure to America already, and you don't necessarily want to double up, you want to gain some diversification. You can see there's a huge range of different ones that you can actually access. It's very interesting. Okay, so that's me. I've talked 6 minutes too long. But look, please ask me anything about funds that I've mentioned, ETF stocks, ESG investing in general. There is a Q&A function here, so please put through a question and I'll answer it now. But if not, you can drop me an email and you can look at the various social media things that I have here, Twitter, LinkedIn, and also my website. Over the weekend, I'm obviously getting distracted by the US elections at the moment, but over the weekend, stroke early next week, I will be releasing an article on LinkedIn that will also be on my website around electric vehicles. Bit of a deep dive into that space, and of course, battery technology as well. And now, of course, this overflows into sustainable investing quite significantly. So have a look on there. But like I said, feel free to ask a question now or email me. So I've actually got one question put through already. So it's, are you expecting to see interest in sustainable investing from next generation clients, i.e. your clients' kids? Millennials seem keen on this topic. Yeah, it's a good question. I mentioned that, 3 or 4 years ago, it was 1 to 2% of my clients and people that I spoke to were interested in this area. That's changed significantly. I mean, we're talking probably as much as 20 to 25%, hopefully even more after today, of course. But it is also clear that it is, yes, younger clients. Millennials is very much something that everyone's looking at the moment, but it is indeed. I can see that straight away from the people that I speak to. ESG does come up more with millennials and younger clientele than it does with some of the older ones. Again, that's just part of the society and world that we're in now. The changes that we're seeing, I think, millennials is a generation that has seen and is now experiencing firsthand, like I said, the social media world. So a lot of climates and the social, the E and the S of the ESG is all over media, it's all over social media. And it's things like Netflix, the documentaries that I mentioned. These are watched and talked about by millennials a lot. So for sure, the interest at the moment is more on the younger client. But hopefully, and again, looking through this list, there's the young and the slightly older clients here. So, it's changing already. And part of why I want to do this is, again, to help spread the word, to help educate and increase this interest. Okay, we've got another one. Does ESG investing intersect at all with crypto investing, or is it only within the realm of financial investing? Interesting. As anyone that knows me, I'm not very clued up on cryptocurrencies at all. I know what they are, I follow them, I have some investments, probably more on the speculative side on them. But again, the deep dive into why cryptos, I guess, exist is partly ESG, actually. It's the independence from a monetary system. Obviously, there's no paper money. There's no plastic cards, although some of them have cards where you can spend cryptocurrencies. The answer is I don't know. There's for sure an overlap, absolutely. And again, cryptocurrency has been created and is popular in part with this growing change in the way we see, the planet, the world that we live in. And it'll be interesting to see actually how both evolve. Both have got, a lot more popular in the past couple of years. And I imagine that will continue. One overlap, actually talking crypto, PayPal. PayPal came up quite recently, and also actually DBS as well, being linked with Bitcoin. But you're seeing this overflow into some of the major corporations, and actually the payments sector is very interesting. Visa, MasterCard, PayPal, people like this, they're starting to embrace the crypto side, but also they are also embracing ESG. All of those companies are very high ESG scorers. And you can see, I think, if I'm not wrong, Visa comes into, or certainly did come into, a number of the MSCI ESG indexes as actually in the top 10. So yeah, I think there's an overlap for sure. How much it directly intersects, I don't really know, to be honest. So, okay, any other questions? Please just hit the Q&A button. There's still some participants, which is good. Anyone else? No, okay, not a problem. If you do have any more questions, like I said, just pop me an email or, go on my social media accounts. I hope you found this interesting. I hope it's been thought-provoking. Even if it just means that you take shorter showers and take the train or bus instead of a car and buy a metal straw, great. But yes, hopefully this has demonstrated that there are ways, to sustainably invest. And it doesn't mean that you have to, cut your returns or potential returns. Actually, potentially you could outperform traditional investments. So, okay, right. That's the end. Yeah, ping through any questions. Otherwise, have a good evening or day, depending on where in the world you are. And yeah, hopefully this has inspired you to Google ESG and contact me for more.